So again, the book that I'm going to read to you from really quick is Trading Instincts by Curtis Faith. Curtis Faith is one of the traders profiled in the Turtle Traders book. Michael Covell, I believe, is the author of that book. This is an awesome read. I love it that it's not super long, not like jam-packed with information on each page. So I've been flying through it. And the passage here that I'm going to read to you is about hubris and confirmation bias. Trading psychology. It's funny because I put up a story on my Instagram the other day and I asked people, if I do a free webinar next month, what would you want it to be on? And the options that people could choose was the ASFX systems, getting started in Forex, trading psychology, or technical analysis. Out of all four of those answers, most people wanted a webinar on trading psychology, which I find interesting because I think what it shows me, at least, is from my audience, a lot of people seem to think that they have, or they do know that they have, a winning trading system, but they make their own mental errors. They get in their own way, and that holds them back from seeing the full potential of that trading system. Is that anybody here? If that's you, hit the thumbs up button. Give me a yes in the chat. Because I think we all kind of struggle with that to different degrees, where we might have a winning system, but our greed, our emotions, our fear, all these, emotions come to the surface and prevent us from trading the system as best as we can. So studying trading psychology can help us, really just studying human psychology can help us not succumb to the decisions that those emotions want us to make and instead stay logical and stay on edge. So let's talk about confirmation bias, because again, it's something that we all struggle with. In the book, Curtis says, a behavior that has caused problems for many traders is the desire to find supporting evidence for previous decisions or ideas and the tendency to overlook contradictory evidence. So what he's saying is a behavior that causes issues for us is we want to find evidence that supports our belief, and we don't pay attention to the evidence that turns away from what we believe, that isn't in alignment with what we believe. This tendency is called confirmation bias in behavioral finance. Traders need to pay attention to this reality instead of wishful thinking. The best approach is to play devil's advocate and troubleshoot those ideas or decisions to identify where they might be wrong. One of the most interesting concepts I've heard in the last few years is the notion that wisdom is the capacity to have, quote, strong opinions weakly held, end quote. My favorite financial blogger, Barry Reitholtz, that's who Curtis mentions here, says he first brought this concept to my attention in a post which he described how he thought it applied to trading and investing. The concept originated with Paul Saffo and the Palo Alto Institute for Future, a nonprofit organization that helps companies make decisions about the future. Saffo applied the concept to the uncertainty associated with making forecasts about the future. The idea has a considerable merit in any area with a high level of uncertainty, such as trading. Weak opinions have a negative impact on trading. Master traders are decisive. To make money, you need to take trades. As a practical matter, this means developing models for how the market works, testing them, and then making live trading decisions using these models or systems. Models and systems is the same word in this example. He goes on to say, traders need to have strong opinions about how the market works to make critical trading decisions. Many people have trouble pulling the trigger. Have you been there? If you're weak, if you have weak opinions, you will find this even more difficult. So if your opinions are weak, you're not going to be confident to act in the live market. I was talking to Quentin on our coaching call yesterday about how to increase confidence. And he was saying how he took our backtesting course, and that backtesting has helped him be more confident. Even though I was saying everything that he already proved through his backtesting, he needed to go and do the work himself to reconfirm that belief. So the backtesting has increased his ability in his own belief system, his confidence in his own belief system. So his opinions are strong. So again, it says here, strong opinions, weakly held is the quote. We want to have strong beliefs about the way the market should work, but we want to be willing to get out and turn to the next trade when things turn against us. To finish here, he says, however, strong opinions should be weakly held. Expert traders are constantly on the lookout for why their thinking might be flawed. Paul Tudor Jones says, as soon as I take a trade, I'm thinking about how to mitigate my risk. I'm thinking about what could be wrong with this trade. How am I missing something? And that approach has led him to be super successful. Curtis says, when you place a trade, you should pay far more attention to signals that the market is acting in a manner that indicates the trade is wrong and should be discarded than to the reasons why the trade should be kept. As the saying goes, you should speak and act as if you're right, but also look and listen if you might be wrong. I love that. I'll say it again. As the saying goes, you should speak and act as if you're right, but also look and listen to the market as if you might be wrong. In circumstances of high uncertainty, you should always be looking for indications that your previous ideas are wrong. And any area of high uncertainty, like trading, is where we should apply that. We should be looking for where we are wrong. This requires a certain level of humility and openness. Now, I'm not going to continue to read. You guys can grab the book. It's Trading Instincts, Curtis Faith. But I think it's just super applicable to what we do, because even there at the end, the idea of having humility and being open is something that I've been talking about for a long time, because I think that keeps us willing to say, hey, I had a strong opinion about the direction that Euro USD should move, but it's not moving in that direction, so I'm wrong. I'm going to hold on to that opinion weakly, but I am going to be confident in it and strong on it because I've done the testing and I have my models and my systems that tell me where that opinion should be rooted in. So the systems, the models, doing the testing for those gives you the confidence to have strong opinions. But once we have the strong opinions, we want to not hold on to them too tightly. We want to be able to let them go if the market changes. Everybody with me on that? Makes sense? Thumbs up yes in the chat if you're following me.